Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a phenomenal day. Quick look here again at Bitcoin, the overall crypto market overview. We're going to touch on some traditional markets too, as well as to why they're achieving all-time highs and Bitcoin is still stunted out in the 115K range. So this is market manipulation 101, folks. So all the more reason to consider adding to your position on the way down, because I do think we are due to see some type of continuation higher. We're also going to look at Bitcoin dominance, stablecoin dominance, all those there as well. CME futures, and obviously some liquidation data here that's super important and relevant to understand. So all that and much more, let's take a closer look. Be sure to stick around. All right, folks, before we jump into the back-end liquidation data, I want to bring to your attention something I've never done before. So you can let me know, obviously, your thoughts. If you have any questions, feel free to reach out. But you do have an opportunity to claim 1 free month of Crypto Cash Premium. All you got to do is register, deposit, and trade with Bitunix. So all the information is here available in our Discord. I'll have that pushed out to Telegram soon. If you have any questions, feel free to reach out. But all the instructions are here for you in case you are not familiar. And simply put, Crypto Cash Premium provides you with trade alerts, signals, and of course, access to my university. So good stuff there. Feel free to reach out if you have any questions. Let's jump into some quick polls here before we get started too. I like to kind of discuss this here, kind of see what your thoughts are. Granted, I only posted this 20 minutes ago, but after 14 votes, we can see half, actually majority of you on crypto Twitter are fairly bullish. We're looking at 114 to 115K range holding or seeing 117K plus. Crypto YouTube, however, is a bit on the bearish side here. I'm willing to speculate a lot of other influencers are probably pushing, or pushing for the price to go lower and talking about that. I do think we're seeing a short-term correction right now, but I do think the bottom's getting closer to being in. We'll discuss that here in a moment, but crypto YouTube is fairly bearish. All right, so let's take a look here at dominance first, kind of get some perspective. The bottom right here is altcoin dominance. As you can see, it's pulling back here, but still maintaining a pretty good amount of volume. Okay, so we're in good shape there. I don't really see that being a huge problem. When we look at stablecoin dominance too, there's a lot of money flowing into stablecoins, but it's not quite as much as this is pulling back. That's usually a good sign here, implying that there's still more sustainability and that we have more potential for altcoins to recover and bottom out here soon. But of course, ETF net inflows are low for Ethereum, and we can see that pull back here over the weekend. So that's kind of what we're looking at there. Then we take a look here, of course, at CME futures. The simple way to understand it is all CME gaps have been filled. Any CME gaps that were created over the weekend were filled with this pullback here. So really not much to note there. I've looked and there's nothing to see there. Looking at liquidation, this is something I like to look at to kind of see what the ratios are, because we saw a pretty significant amount of longs liquidated yesterday. And today we're seeing about a 5-to-1 ratio for Ethereum, with majority of altcoins is a 10-to-1 ratio for longs. And then of course, Bitcoin is roughly a 3-to-1 ratio. So that really kind of tells us that for the most part, altcoins, yes, are getting hit the hardest. Ethereum, not quite so much. It's holding its $4,500 range so far. And Bitcoin, of course, just slowly pulling back. And then we look at Solana too, that's a pretty significant margin. A lot of late longs are getting hit there hard, but once more, that was a fundamental catalyst, and you generally want to try to sell into this news. We actually had a short position open with Solana, and obviously it's just one of those things where you never truly know where the top's going to be, so trading against the fundamental catalyst is not a good idea. We basically just traded that coin for a short while and validated it, and now it's obviously in profit if you held open. So it's just a funny thing how that works. But the concept here remains the same. Fear and greed index is still neutral. We've talked about this previously being a very, very good sign overall. And then just the quick summary here is that altcoin season index is still very high. Granted, we're tapering off with altcoin market cap dominance, but once more, we're still over that 1.5 trillion mark, and there's a lot of altcoins still doing very good compared to Bitcoin. In fact, very few altcoins are underperforming versus Bitcoin. So that to me is a very, very good sign here, letting us know we have sustainability. Now, you could also argue that the price action is going to pull back because of it, but honestly, it depends on how you look at it. There's a lot of support now with altcoins having broken their descending trends. And generally speaking, that's a positive sign, letting us know that establishing these higher highs and higher lows is a very beneficial thing overall for altcoins. And we're going to make sure to verify and see if there's any invalidations with the coins we're covering today, but also more importantly, what is Bitcoin looking like? When we look here in the last X amount of days here, we can see the amount of longs for top traders is increasing. So this generally tells us there's a lot more confidence with those who have larger balances. And the same thing here too, even though we're seeing it kind of taper off for the position sizing, it's still quite high. So that leads me to believe that we have good sustainability in this range and that we're starting to kind of bottom out. I'm still running in the narrative that 113,000 is still a possibility because we haven't retested that level yet, and that was a previous high there with that cup and handle breakout. We still haven't retested 113,000 since we broke free from it. So there's a lot of value there left remaining, if you will. Probably some fair value gaps too, even though I think majority of the fair value gaps were filled at 114.5. All that said, looking at open interest on the right-hand side here for Bitcoin, we can justify and recognize that 114,000 is a pretty solid amount of support based on open interest. Once more, secondary to that, 113,000. Keep in mind, this last 7 days worth of open interest, but if you zoom out, 113 will also be that relevant number more consistently, even across the last 4 weeks of trading. Okay, so good stuff there. Liquidation long delta is tapering off as per usual. We're now down to 4 billion, which is neither here nor there. That doesn't tell us too much, but we can see that liquidation is pretty close to the downside. So this is why I think 113,000 may still be on the docket. Just because if we take a look here, we can see what 113 is pretty heavy concentration. There's a big chunk between 113 and 114. So if you're going to consider a long right now, I would just say expect the worst, hope for the best, and anticipate 113,000 being in the relative near future as a possibility for us. So what does that mean for us here? Well, let's take a look at the daily and work our way down. And the easy way to understand it is that the daily time frame is still looking bullish, even though we have some early reversal signs. These are pretty consistent in trading, though, of course, where the stochastic and money flow index start to pull back. We're in a position right now where that is not a bad thing. Okay, it's kind of par for the course, which basically just implies that we should expect the price to continue to lower, but it also tells us we should expect the price to not run too far unless there's a significant manipulative event, which could occur this Wednesday. By the way, in case you're not familiar, we do have a FOMC meeting here this Wednesday coming up, Fed rate decision. I think it's going to be more positive than negative, especially with traditional markets doing well. But again, we never truly know what's going to happen there, just based on how market makers, interpret that. So generally speaking, be very careful trading into that event. Typically, that occurs middle of the day there. I think it's 2:30 p.m. Eastern Standard Time is when the fireworks start to happen, and 2 p.m. is the data release. All that said, daily time frame on Bitcoin it's still mostly bullish. We're still maintaining above our 50-day SMA. That's right there at 114K. Now looking here at the 4-hour time frame, we're still above all moving averages. There is a lot of confluence here. Once again, 113,000. With A, moving averages, B, the previous highs working as new lows, and also, of course, we're still maintaining above the cloud, even though there is a fair value gap there as well. So more incentivizing price action there in that range, letting us know that that level should hold if we retest it. Now, do you take a long right now on 114.8K? I would probably wait a little bit longer, see if the price pulls back a bit further. But I'm a bit more of a conservative trader, and I don't like to FOMO into a pullback like this. I like to wait for the pullback to be established and the base, the foundation to be created, if you will. And we don't know where we're going to go because we have a technically established lower lows so far. So you got to wait and see where that's going to go. But at this point, overall, we do have still more slightly favorable signs for Bitcoin that it should go up in the relative near future. It would just make perfect sense for the price to continue to pull back leading into that FOMC meeting. So those are my thoughts there. What are yours? Why don't you comment below? Let us know. What are you doing with Bitcoin? Are you bullish? Are you bearish? What are your thoughts? Comment below. All right, folks, let's go and take a quick look here at Ethereum next and kind of see roughly what we're looking at here. This is that sweet spot that I was looking for. I wanted to consider a long position at 4,500, but once more, I'm not just going to take it in the blind. We're going to reevaluate and make sure. But the concept here remains the same. There's a lot of confluence in the $4,400 to $4,500 range with previous highs here essentially being retested as new lows. And then furthermore, we have some confluence below the price there, not only with that 0.618 fib level at 44.50, there's also a lot of open interest at 44.40. So we're going to talk about that and take a look there, make sure we understand what we're looking at here first of all. So let's quickly just note here in the last 7 days of open interest here for Ethereum, we can see the most amount of volume accumulated at 44.40. Okay, so that is a huge amount there, essentially $250 million right there in that range. All right, so that tells us there's a lot of support in the $4,400 to $4,500 range, because once more the macro implies 4,500, but also we look closely here, 44.40 is that secondary number. Furthermore, liquidation long delta is tapering off, so I don't want to get this twisted here. We are shifting bearish. We're starting to see that momentum shift. Okay, so we very well could see the price action continue lower. So I'm not proposing that you just take a long here in the blind, just because I'm excited about this potential entry level. Okay. Having said that, though, we look at liquidation. We want to recognize on the left-hand side, we see last 7 days liquidation. There's not a lot left here in the local range, right? So little chunks here and there. Obviously, there's a big chunk down as low as 4,300. So we do revisit 4,300. We should expect 4,250 or 4,200 at that point, because obviously a potential long position would be invalidated at that level, right? Once more, liquidation sweeps happen all the time, and that's that last large chunk of liquidation the last 7 days. Now let's zoom out and just do our due diligence here and see what the 1 month looks like. And just to clarify, the 1 month is typically going to show larger pockets in certain areas there, which is at 42 to 4,100. So from a macro perspective, honestly, losing 4,500, we can presume the price will continue down as low as 43 or even 42 to 4,100. Okay, so that's kind of roughly where we're at. So that's the overall sentiment there for Ethereum. Now, when we look at the daily time frame and work our way down, we can see once again multiple candle wicks up to break this level here, and our first initial retest of that as a new low. So we've got that. We've also got our 0.5 fib level at 4,500 and our 0.6 and 8 at 4,450. So that area of 4,500 to 4,450 to me seems like a good dollar cost average consideration for a long position. Granted, this is all requiring Bitcoin to bottom out soon and not continue much lower, because ETH is pulling back a lot more significant than Bitcoin at this point, right? Once more, we already identified with liquidation, it's like a 5-to-1 ratio versus 3-to-1. All that being said, there was a lot of overextension as well for this coin too, having broken through that. And if we look here closer, you may not be able to see it very well on the charts, but I take my word for it. Our fair value gap at 4,480 is now officially closed. So it's this guy right here, that big old chunk of profit left remaining. So market makers are probably pretty happy right now with their profits that they took on those positions. So basically that's where we're at there for the daily. The quick summary here though is that even though we're seeing some shorter time frame stochastic swings to the downside here, we're still maintaining above all moving averages and still in very good shape. So I would not want to misinterpret the fact that Ethereum is still very bullish on the overall sense. Now we look at the 4-hour time frame. We can see we had this overextension led by a consolidation effort there on Sunday, and then of course a dump here on Monday morning. So at this point, when we look at everything, we got a lot more confluence here in the lower price points. Even though we are shifting momentum here, we lost 50 on the RSI, it may be a good consideration for a long. So keep this in mind though, when you look at the 4-hour time frame, there's a lot of things here telling us that we've shifted to the downside, and we have and should expect further downside. However, a lot more supporting factors, things that carry a little bit more weight than just moving averages and or divergences, lead me to believe that we're probably going to be bottoming out here soon. So I'm leaning more towards a $4,450 to $4,500 average entry for a potential long position there. And the likelihood of the price action just going straight up from here is pretty low. It all depends on obviously FOMC on Wednesday, but what a good rule of thumb is to try to take profits just before this local low. So 45.80, hypothetically you take a long position, you should secure profits around 45.80 because that would put us in line with the descending trend. Okay, so that's essentially what I like to look for when I try to take a long or a short depending on the direction it's heading. So if we see 4,600, then I may want to consider a short. If we see 4,500 holds fairly well here, I may consider a long. That's kind of the concept. All right, so those are my thoughts. What are yours? Comment below, let me know. Quick heads up to my traders, make sure you take full advantage of this offer here from Bitunix. There's a significant deposit reward bonus as well as a $16,000 individual reward for just trading on the exchange. If you use my link to register in the past, you're automatically eligible. If you use my link to register now, you're eligible for all future trading bonuses and competitions. Check out the links down below for more information. Let's move on to Solana next. Let's take a look here. This is a coin also very overextended. Tons of questions if we're going to hold 230 or not. The easy way to understand it is that we have more confluence at 220. That's our original take profit target on our short position. So I think that that's more likely to occur than 230 holding. But let's just double check to make sure. Now, looking at open interest is the last 7 days, we can see 228 and 220 are those heavy concentrations. So 225 is also tertiary there, but generally speaking, 220 to 230 is that support range. So I feel averaging into a long position in that range isn't the worst idea ever, because this coin has a lot of strength, right? It has a ton of volume still flowing in. All that said, we got 2 billion liquidation long delta, which is still sustainable. However, when we look at the overall sentiment here for liquidation, we can see 228 to 230 is that next potential area. So I think there's a distinct probability we at least see the 220 range retested here soon just to sweep those late longs and then potentially reverse back up from there. Now let's quickly look once again for our due diligence here on the monthly time frame and recognize kind of where all the liquidation's at. we look on the monthly, there's not a whole heck of a lot of local liquidation here. At 220 is once more that secondary, or maybe that even that primary area of liquidation here locally. So the overall sentiment is that 220 to 230 should be retested here soon. I'd be very surprised if we don't continue lower here. The majority of our fair value gap has been filled, but once again, 229 is that lower fair value gap. And you can kind of see here, if you zoom in a little bit, there is a previous resistance here that it's going to be turning into a potential support here soon. Now, it's not a guarantee, but previous highs should be retested as new lows before the next leg up. So all that said, we're still in a pretty good bullish continuation pattern. Believe it or not, we're still looking good on the moving averages. However, the 4-hour time frame looks absolutely abysmal for divergences and momentum shifts. Okay, so I think we should expect the price to continue a bit lower. We look at the daily time frame. Once more, we do still have that same fair value gap there as low as 229. But overall, the better, more safer play would be a consideration in the 220 range, the low 220s, because we have a lot of confluence there with previous highs here, working as potential new lows. Our 0.68 fib level is also relevant there, kind of letting us know that if the price were to retrace, it'll usually start slowing down in that range. So 218 to 222, I would say, is a good ballpark figure for a long consideration, just in my mind. Obviously, a lot can change between now and whenever that happens, and that may not even happen at all. We could just see the price pivot and bounce from here. But there's not a lot of reasons why the price should just turn around and just go up from here, okay? There's more propensity to continue lower. So just be mindful of that. Once again, expect the worst, hope for the best, and that's the best strategy you can do for yourself. So I would expect 220 to be retested, and I'm going to go ahead and set an alert in like the 222 range here, just to kind of give us some potential reevaluation at that level, okay? So 222 sounds like a good place to consider just reevaluating things, okay? Once more, I'm not going to just set a limit order for 50x leverage long, in the blind, go to sleep and hope for the best. That's just not what you do. Good traders wait for the opportunity, and you're going to reevaluate when the time is right for you. Don't just don't just be like setting limit orders while you're driving and being one of those dummies. Anyways, conversation for another day, but just trading is all about risk management and not just FOMOing in because you feel like you missed an opportunity. That is a terrible strategy. So looking at the back end here for SUI, let's go ahead and transition over here to SUI. This one is very, very disappointing. And this is another reason why you don't just take trades in the blind. Because if you saw my analysis from yesterday, you'll know that I was wanting to consider a long position in the 350 to 360 range. Okay. Now, obviously, you can see there was somewhat of a falling knife effect here, and that's not a reason to trade either. But the concept is that 360 didn't hold worth a darn. All right. And that's unfortunate, but we're now in the 350 to 340 range. It's good in a sense because obviously we have a better value potential consideration for a long, but the momentum has shifted, and that's the reason why you don't want to just take it long in the blind, because as you can see here, the bulls have totally given way. We have way more shorts than longs. In fact, this coin rarely hits the half a billion mark, and we're right now at about a half a billion shorts. Now, that does imply we could see those shorts get liquidated, but if you look at all this liquidation, for example, I think continuing to short this coin makes a lot more sense right now. I think it's belly flopping pretty hard, and we should, in fact, at this point, see the low 330s because of that. So let's double check and see kind of where we're at. We are pretty well overextended, leading to this this potential support range. We zoom out a little bit here in the last, this is from approximately 1 month's worth of trading. We can see the most amount of volume at 348. So right now, we're tentatively in that support range. Keep in mind, just because points of control occur doesn't mean they're going to bounce there, right? So with us having more control there with volume here locally, it does not imply that we're just going to instantly recover. But if we zoom out here, I'm going kind of with the larger time frame here. This is like a significant macro structure. We're looking at about almost a year's worth of data. We do see a lot of confluence there at 345. I'm rounding down a little bit, but 345 roughly is that heaviest amount of position sizing for people on average over the last year. So that tells us a lot that we're kind of entering that demand zone. We take here a look though, and we kind of zoom in. We can see we've lost 50 in the RSI. Stochastic is swinging down. Money flow index is still high, but you got to recognize MFI is a misleading indicator on larger time frames. Most people will use market cipher and get totally screwed and destroyed on it because they don't understand how it works. It takes the last 14 candles and basically gives us the average of money flowing in or out. So with it going high right now, that usually triggers a buy signal. But the truth is, this isn't a good place to consider buying just based on the simple fact that we have a ton of momentum moving down. We look at the 4-hour time frame, same thing occurs here as well. We've lost all moving averages, and we're in a position right now where the likelihood of further continuation lower is higher. So this is not one of those like situations where you should feel great about buying SUI at 347. I think it can continue to go lower. And if you look at how poorly it's paired with other altcoins on the way down, it's just that there's no reason to consider a long position on this coin. I would say at the very least until we see the 330 to 340 range. Okay, it is a falling knife right now, and if you try to catch it, you might get cut. So the odds of success in taking along are very low right now as far as finding benefit. Okay, so I hope that you can take that with a grain of salt, or just in generally take that in stride and understand that it's in your best interest not to trade a coin like this just based on how volatile and ridiculously terrible it is performing versus Bitcoin. That's kind of the concept. Once more, trading altcoins is all about understanding the correlation between that altcoin and Bitcoin itself, right? The pairing. How do they work well together, and how poorly are they trading? All right, so that's kind of where we're at there for SUI. It does not have my vote for a long, even though there is some macro structured support in this range. Just before we take a look at the next altcoin, I want to recommend you consider trading with Bitunix. If you use my link to register down below, or have in the past, you'll always be eligible for future trading competitions, but this one is awesome. It's probably the best one I've seen yet, with a full-on $16,000 individual prize pool, as well as a collective prize pool as well for the top 30 traders. Be sure to check out the link down below for more information. XRP, on the other hand, this coin is actually looking quite bullish in this range here. And if you might have saw my video from yesterday, if you weren't you were one to not fast forward to the end or try to just not listen, I'm glad that you did listen, because that perfect wick down to sweep all that liquidation at 295 happened, right? It's manipulation 101, folks. It's pretty easy, pretty straightforward. But the concept here is that $3 is still a strong support. The likelihood of holding this range is higher, even though it does look like we are starting to lose that level. But that candle wick down just absolutely swept that whole level down below. So let's take a look here really quick, just kind of talk about this. First of all, last 7 days of open interest is all over the place. Like, we're probably better off zooming out on this coin just to get some perspective on kind of where we're at, because I don't really like to see that much open interest in one range. But once more, that really just reinforces support at the $3 range. Okay, we zoom out, we can see 295 is that secondary area of open interest. So if we do lose $3, 295 to 290 is a sensible consideration for long. The reason why isn't because liquidation delta has shifted bearish. It's mainly because we can see here that there's a lot more liquidation in the low 290s with these late longs jumping in. Okay, so what do market makers do? They they trim the fat, and everyone taking longs at 290s is probably going to get hammered here soon. So I don't feel confident, even though the $3 range is a pretty solid support range for XRP, and it seems to be holding well. This just feels too good to be true. I feel like we're going to see one more wick down to the 290s, and if so, that would be a solid consideration for a long. Main reason why is because we got 0.618 fib level holding there in that range. We've got a nice little area of control just below the price at 285. Those are some confirming factors, things that people don't typically like to look for. Looking at the daily time frame too, just to keep this in mind, I'm not bearish on this coin at all. I'm just letting you know in general, those are all indicative signs that we're going to see further downside. All that said, though, we do have a lot of confluence here. Like, we zoom out, 303 is that area of support, right? So we're right there in that support range. People are adding to their bags at $3. The problem is market makers know this, and they're probably going to keep pushing you lower so they can get a nice entry, because all they got to do is just sell to that 290 range. Then everybody's liquidated, and what do? They buy right back at that level and return it as if it never happened. That's why these candle wicks of this size here exist, because market makers continue to manipulate the price. That's the reason why Bitcoin is in 114,000 and traditional markets are going straight up. All right, all-time highs for traditional markets, and Bitcoin stuck on stupid at 115. So that is just the way it goes. Unfortunately, folks, crypto is the wild west of trading. Having said that, though, the daily time frame, we want to recognize we're still over 50 in the RSI. Money flow index is quite high, of course, but we've seen this before. Stochastic swinging down and MACD losing momentum. There's a lot of reasons why we should expect a little bit further downside. So obviously, if you're an XRP maxi or whatever, you want to add to your position at $3, I wouldn't fault you for it. But if you're trying to consider a high leveraged long position with a large position size at $3, I would urge caution, just based on a lot of other complementing factors that are not necessarily on the charts, which we've already addressed. All that said, though, we do have some nice confluence at 295. I do think 290 to 295 is a pretty solid consideration for a long position, just based on Well, things we've already addressed, but also moving averages below the price. We have lost 50 in the RSI, just generally implying that we are tentatively bearish in this coin. Okay, so we want to expect the worst, hope for the best, right? And we want to expect the price to go lower. Once more, my thoughts here is that pretty straightforward. 290 to 295 would be a great place for a long, just based on the simple fact there's a lot of liquidation there. Okay, what are your thoughts? Why don't you comment below? Love to hear it. Thanks again for being an amazing part of my life. Deeply appreciate it. We had like almost 100 subscribers from over the weekend. So I want to say thank you again for that awesome vote of confidence. I look forward to working with you if you want to become a better trader. CryptoCash.tech is a site, link down below. Make sure you take advantage again, of course, for this CryptoCash premium free membership. It's all linked down below as well as in our Discord. So if you have any questions, feel free to reach out. Look forward to seeing the next one. Take care out there. Bye-bye.